Hello and welcome to the fourth and final video in this guide to testing your trade idea. This video is all about refining your idea. So far we've created trade simulations with entries based on price crossing up through a Bollinger Band level and exits based on price crossing down through a level. We've run simulations using multiple test levels, and now we are going to take those trade simulation results and run them through a Monte Carlo simulator in order to get a better idea of performance regardless of the sequence of trades. And finally, we will apply tagging to our trade lists to tag the trades with technical and seasonal criteria and run Monte Carlo simulations on those tag groupings to see if there are any other factors that would improve the trade idea. So let's get started. Okay, so picking up where we left off in video number 3. We had run the trade simulation batch and we had chosen an output folder for the files that were going to be generated when running this batch, and that was going to be in the documents folder, EdgeRater reports %b cross batch. If I open that folder up in Windows Explorer, we can see all of the files that have been created for that batch. There's one file for each of the configuration line items in the batch configuration file. And these are just simple Excel files. You can open them up in Excel. We'll take a look at one of them. And you can see the format of this file is a simple trade list, but there are also some other report sheets in here, such as the trade summary, the daily equity data, the daily equity chart, and the daily index chart. So the trade list is really the fundamental result, and all of the other information is based off of data retrieved from the trade list. So this is really just to prove that these are proper Excel files that have been generated in your reports folder. Now, another way to open up those files is within EdgeRater and not in Excel. We've seen that already by clicking on one of the outputs from the summary report and clicking on Open Link to Document, and it opens up that exact same file, but this time it's in EdgeRater, and therefore you've got all of the good things that EdgeRater offers, like linking from the report into the chart, the built-in chart in EdgeRater. So you can see in this case by scrolling down through the list where all the entries and the exits were for this trade simulation. And when you look at the daily equity chart in here, you'll note there is a particular form of this chart. Now that's very dependent on the order of the trades in the trade list. If these trades occurred in a different order, the daily equity chart would look very different. And there are many iterations that you can test by just changing the sequence in the trade list. And that's the idea of running a Monte Carlo simulation on a trade list, is to resequence trades and see if there's still a positive edge in the system, even if you have changed the order in which the trades have occurred. So we're going to go ahead and run a simple Monte Carlo simulation to start with on just one of these files. So I'll go back into the templates folder, and if I'm looking in my trade simulation category, and Monte Carlo simulation is one of those templates. So I have to choose the input file. If I click on choose, it will open up the Explorer in the reports folder, and remember we created all of these reports in the %b cross batch subfolder. So here are all of the reports, and if you remember from running the batch, the configuration that had the best result was the 0.1 configuration. So that is here, trade simulation, and the file name has been written to reflect the parameters in there, 0 and 0.1. So I'll open that in here, and then I'll choose parameters for my Monte Carlo analysis, and I'll say that I'll resequence the trades, and I'll create sequences of 50 each time, and I'm going to do 1001 of those sequences of 50, and I'm going to choose to vary the fixed fraction just so I can show what that actually does. So I'll say yes to that. Let's put a 1 in that cell and press enter. That turns it to a yes, and I'll just go ahead now and just press run. And I'll close down the chart over here, so all we can see is the report, and on the left hand side of the report are the original trades in the original order. So if we go back to the trade list, you'll see that negative 0.16% followed by 1.79% followed by 3.68%. If we go to the Monte Carlo analysis, that's the original order of those trades. And then the Monte Carlo simulation is going to randomly pick trades from this sequence and resequence them and create multiple iterations of this trade list to give different charts for the trade equity over trades. To generate a new sequence in this particular report, you just press, as it says in here, F9, and we'll recalculate this report. So if I press F9 here, I've now got a different view of an equity chart. This is one of the possible combinations that could have happened if the trades had occurred in this new sequence that we've just created. And if I keep pressing F9, you'll see how the equity chart looks. Sometimes it ends up with a much better result than other times, and sometimes it ends up with a losing result. And the whole idea of running this Monte Carlo multiple times is to get a sense of where the mid value is in the runs, to see if there is still a positive edge in running with these parameters. And if we look down here, we'll see what the final equity is for having run 1,000 times or 1,001 times, as in the original specification on this template, and sequencing them in groups of 50 trades. So a final equity at the 50th percentile level is giving a 1.07 relative final equity, which is a gain. Anything greater than 1 is a gain, and anything less than 1 is a loss. And we should actually order this by greatest to least, and here you can see where the fixed fraction comes into play. So a fixed fraction of 1 means that the entire equity, starting equity, is used for each trade, and that is then plowed into the next trade, and then it goes down through various fixed fractions. So if you're using a fixed fraction of 0.1, you're only using 10% of the available equity in order to take on the next trade. And so the final equity in those cases is going to be less, but you'll also end up with less of a drawdown too. So, but we can see that after running this 1,001 times, sequencing groups of 50, we have a 1.78 FE50 level. To give more of a visualization of what that means, the FE50 level, if we go to one of the other spreadsheets in this report, for instance the fixed fraction 1, which is where this row came from, and click on that, we can see the distribution of these results. So the distribution for fixed fraction of 1 has a 50th percentile level of 1.78, which is this line drawn in here. But these are the range of results that happened after running this 1,001 times. So the worst sequence was down here at the 0.69 level. That was out of the 1,001 runs, the worst final equity was a 0.69, and the best final equity was, if we go scroll, well, you can actually see it on the chart, but it's up here close to a 5 level. But round at the mid level, you have got a 1.78. And then drawdown is also done in the same way. So you've got a drawdown here. You did have a drawdown in the worst possible cases of 35%, and in the best possible cases less than 5%. But the mid level here at the 50th percentile is just over 10% drawdown. And you can see what that is here. MD50, that's 11.1%. And that's where you can see what the FE5 and FE50 and FE95 mean. So the FE5 is at your 5 level, so that would be 0.05 on this chart, so that's the value there, and the FE95 is at this level here, which is around about a 3, as it says here, 2.98, so you can confirm that on the chart here too. And the same for MD. So FE stands for final equity at the 5% level, the 50th percent level, and the 95th percentile, and MD stands for maximum drawdown at the 5% level, the 50th percentile, and the 95th percentile. So that is a very quick review of Monte Carlo template and how that works. But the most important thing to know here is you don't have to go into all of these separate spreadsheets and look at all of the different results. They're all brought out into this table over here, which is your summary table to show you the different levels to the different fixed fractions. And then remember this table here, because each one of these rows will be brought out into an overall summary report when we run Monte Carlo analysis on a whole set of a batch processed trade list. And so you'll see that result here very soon too. So going back over to the templates tab, what we have done there, just to remind you, is run Monte Carlo analysis on one of those reports. Now what we can do is run Monte Carlo analysis and tagging on all of those reports. So what I'll do here is go into the template that does that. It's called Profit Boost, and it does explain what it's trying to do in here. It's applying various tags to the trades and running Monte Carlo analysis on groups of those tags. You'll see what I mean when I run this report. But first off, I'm just going to go ahead and select all of the files from this %B cross batch, and the actual simulation files start with trade simulation, so I can just select all of those. I'm doing a shift click here in Windows, the normal way of doing a multiple select, and clicking open, so it's listed all the files here. I'm going to set up the same set of parameters here. I'm not going to vary the fixed fraction here because that will generate a lot more rows in the result, and for this case I'm just going to be interested in the fixed fraction of 1, so I'm not going to vary fixed fraction. And then you have an opportunity to choose the tags to experiment with, and by default there is a seasonal tag layout, and as you can see down here, that tag layout file will tag based on day, week, month, year, day of month, trading day of month, and trading days to end of month. So with those settings set in there, that's all I'm going to have, and I'm going to press run. Now it will run through all of these reports, create all of the tagged files and all of the tagging, run a Monte Carlo analysis on all of the groups of tagging, and end up with a final result table, which is what we're going to take a look at in just a second. We're going to pause this video because we've only covered about 4 of those 26 files, so let's just let this run, and when it's finished we'll come back. Okay, so it's finished running that report, and I'm now looking at the summary of all of the combinations that it's run. So I'll go ahead and explain what all this means, but first of all take a look at how many rows here have been generated on this report. Each one of these rows represents a separate Monte Carlo simulation that's been run. Starts at row 6, and if we go down to the very end of the list, we've got 3,605. So about 3,600 individual Monte Carlo simulations run on these different groupings of tags for all of those input files. So if you remember, the file itself had a tag to indicate what the parameters were for the crossing above the upper Bollinger Band and crossing below the lower Bollinger Band. So a 00 means that it was entering on a cross above the lower Bollinger Band and exiting on a cross below the lower Bollinger Band. So that's everything with a file tag of 00. In the file tag column, we've got all of the different combinations of parameters that we had defined in the trade simulation batch file. The fixed fraction of 1, we only ran with fixed fraction of 1 for these Monte Carlo simulations. We could have run with 10 different fixed fractions. That obviously would have resulted in a much larger report, but is unnecessary for the purposes here. And if you remember from the individual Monte Carlo simulation that we did just now, these values here, so this row essentially gives you a value for FE5, FE50 and FE95, and the same for MD5, MD50, MD95. After running those individual Monte Carlo simulations, those values have been extracted and copied into the report for that particular tag combination. And then you've got some summary information about the trades that are involved in that tag grouping, i.e. the count of trades, the average days held, how many were neutral, the percent positive, the percent negative, and the average percent return. And then a combo name. This is all about tags from this point on. And before we ran this template, if you take a look back at the Profit Boost template, these combos are given different names, so tag combo 1 through tag combo 7, and in this case each one of these combos is only looking at one of these factors, so day, week, month, year, day of month, trading day of month, and trading days to end of month. But you could have run this with multiple combinations in one row. So let's go back over to the report viewer and just take a look at what it's showing here. So it does run, in addition to running tag combo 1 through 7 there, it's also doing an all trade combination, so everything in the file. And then it split it down through the day tag, which was obviously Monday, Tuesday, Wednesday, Thursday, Friday, in a different order here, but anyway, all 5 of the trading days. Then weeks of the year, listed down here. So it ran all of those for all of the files. Then month of the year, so 12 of those. Then the year, so there are 10 of those because we've only got 10 years of history of GLD here. Then day of month, trading day of month, and trading days till end of month. So ran all of those different tag combinations for this 00 file, and then it went and did exactly the same for the 0.1 file. So it starts again, goes through all of that, and through all of the files that we have as input files, it has run those combinations. So once you have this final result, you can then sort by highest FE50 level to find the ones with the absolute best Monte Carlo FE50 level, but you also have to pay close attention to how many trades actually made it into that tag grouping. So in this case there were only 2 trades made it into this tag grouping of week 12. Okay, 2 trades in week 12, and 100% were positive. So when you've got 100% positive trades, once you start doing a Monte Carlo simulation, you're only extracting positive trades for each of the iterations, so you're going to get very large numbers in those cases. So you have to kind of just bear that in mind. So there's a lot of cases here where you've got 100% positive trades, and some of these only have 1 trade in that grouping. Now, to see the individual groupings, what you can do, or the individual trades and how they're tagged, you can click on one of the rows here and click on Open Linked Document. Now this is going to open the tagged file. So it's got the trade simulation file that we've seen before, but now you've also got an area where it's put the tags in. So which day of week the trade entry was on, which week of the year, which month, etc. So that's how it's gone and done its grouping. And if you wanted to see the actual trades for the grouping you're interested in, for instance over here, you might be interested to know which 2 trades were in week 12. Well, you can go over to the week filter and just select week 12, and you'll find 2 trades in there. There was a 28.96% trade and a 32% trade, and we can even see what they were on a chart. So we click on that one and that one. So 2 trades with exactly the same, and we'll put this onto a day, by the way. It's on week right now, put it onto a day. So that's better, it's a day chart. So you can see that there were 2 entries. This entry is valid because it was a cross above the lower Bollinger Band, generated the entry, and the exit was generated on a cross below the upper the 1.1 level. So I've opened, just bear in mind the file I've opened, it's the 1.1. So a cross above the lower Bollinger Band and selling on a cross below the 1.1% B level, which is just here. And to see the second one, we'll click on the second row, and again that's a cross below the lower Bollinger Band and using that same exit. So that's how you can see the individual trades that are in that tag grouping. So this particular tag grouping is a seasonal grouping. It's got all of these different factors. There's 7 factors in here. So it's quite interesting to see that, but obviously because some of these trades only occur, there's only 1 or 2 trades for each grouping, it doesn't really make a lot of statistical sense, because you don't have enough trades to get a good statistical number from. But I just wanted to show how tagging works in general. And the default tagging that's in there is tagging by seasonal value. You can filter this to find only the tags that have, say, greater than, let's say 10, for example. So you could say number filter greater than 10 here. So these are tags or tag groupings that have more than 10 trades. And then you can scroll to the top of this list, sort by your FE50, and you can see that in this case, trades in 2011 for this file tag. So this is the 1/1.1. So this is a trade where the entry is taken when price crosses above the upper Bollinger Band and exiting when price crosses below the 1.1 level of %B. So that's also above the upper Bollinger Band. And we can see there were 12 trades in this grouping. So 12 trades in 2011. %83 of those were winning trades. Average days held were 38.6, and the average return was 5.5%. And if we want to open that, we can say click on that and say open linked document, and then we can go to the 2011 year and just filter down to 2011. And here are the trades that were included in that tag grouping for the Monte Carlo run. And if you cycle down through all of these trades, you'll see where they were. Some of them had exactly the same exit, but the entry was all based on price crossing above the upper Bollinger Band in this case. A couple of losing trades. There's this one here, and the second one was this one here. So for this particular, see what we've done here is we've taken the all trades for the 1 and 1.1 parameter, and now group them into various groupings to see if there is anything that can be refined with this system. And this is really, to start with, just based on the seasonality tags. Now I'm just going to run using a different tag layout file. And you can define your own tag layout files. There are some built into the system, but you will find them all in your Windows Explorer. If you go into your configuration folder and go into tag files and into system, there's a file in there, read how to use tag files. That's a good place to start if you want to write your own, configure your own tag file. It'll tell you what you need to do. And then you can also take a look at some of the tag files that are in here already. So for instance, tag layout seasonal was the one that we just used. Let's open this up in Excel. Okay, so my seasonal file looks like this for the layout. It is each row is a tag lookup file, and it's got the name of the lookup file here and then the tag name. So this is a special type of tagging, and it uses a lookup file to do the tagging. So let's take a look at the lookup file so you can see what's in there. So tag lookup seasonal is right here, and a lookup file is basically a lookup of date to tag. These are the tags here, and these are the dates. So any let's go right to the very end of this list. I think we've got up to 12/31 in here. So 12/31/2020 was a Thursday in week 53. The month was December. It was 2020. day of the month was the 31st, trading day of the month was 22nd, and the trading days till end of the month is 1. So that's how this lookup file is organized. That's the lookup seasonal. And then this tag layout file, which refers to that multiple times, is just picking out different tags from that lookup file. So that's one example of a tagging that can be done. Another example is on a technical indicator. So let's take a look at something like Connor's RSI. Okay, and so this is a very simple tagging file and is an example of how to use any chart script indicator for your tagging. The type of this tagger is a chart script tagger, and here's the name of the script and the output row from the script, the output line from the script that it is using to generate the tag value. Now, with tags that are generated based on technical indicators, they also can have a range. So for instance, it's important if you've got something that can vary from 0 to 1,000 and anywhere in between, then it's probably not going to be very useful to put those individual values as the tag. You want to group them into ranges or buckets. And so there's a range converter for this particular tag, and it's called range 1. And to see what those ranges are, you just go to the range 1 spreadsheet within this workbook, and you can see the thresholds for creating the buckets. So greater than or equal to 0 and less than or equal to 10 gives you a tag of 0 to 10. Greater than 10 and less than or equal to 20 gives you a tag of 10 to 20, and so on. That's how a range is defined in here. If you didn't want to use the range, then you would leave the range converter blank, and it would just use the output from the script itself. So we're going to go ahead and use Connor's RSI just to show how that works. And I'm also going to just select one of these reports rather than selecting all of them, because that does take a while to run. And I'll choose the 0 and 0.1 file because that gave us good results when looking at all the trades in the file. So let's see if we can narrow down to see if there are any specific Connor's RSI ranges that are better for those trades. So I'll just select that file. We're going to run Monte Carlo simulations in exactly the same way, not varying fixed fraction, and this time I'll select the tag layout file and I'll select the Connor's RSI layout file. You'll see when I do that, there's only one indicator in there, it's CRSI, and it's going to be called tag combo 1. So I'll just show you how that works. So this time there is only one file that it's running against. I could have chosen multiple, but I just wanted to keep this a little bit easier to understand. And it's exactly the same format as before, but now you can see the tag combinations, how they've been configured. So all trades is everything in the file, 66 trades, and then Connor's RSI value between 50 and 60, there were 23 of those trades. Between 60 and 70, there were 20 of those. Between 80 and 90, there were 3 of those, etc., all the way down. And for each of those combos, you have got different Monte Carlo results, giving you an indication as to whether any of those tags show better performance with this trading system. So if you were to, for instance, also think about using Connor's RSI in conjunction with this Bollinger Band system, is there a chance that you could have a better edge? This is a way that you can explore that question. So by sorting by FE50, I can see that I have an FE50, which is your final equity at the 50th percentile level with Monte Carlo of 6.92, which is quite high compared to the all trades. The all trades level was 1.79. And I can see that the Connor's RSI value for that was Connor's RSI between 70 and 80. And there were 12 of those trades. So if I want to take a look at those trades, I click on count or any of the columns here on this row. click Open Linked Document. Go over to, now I've opened the tagged file. We can see the tags have been applied here. And now I can filter to that particular tag. And that tag was 70 to 80. So I can drop this filter down and just filter to 70 to 80. Should have 12 trades in here. And now I can see what each of those trades was. So we know the file itself is trading on the 0, crossing above the lower Bollinger Band, and selling on the 0.1, so selling when price comes down below the 0.1% B level, and also the entry should have been when Connor's RSI is between 70 and 80. So we could put a Connor's RSI indicator onto the chart, and now I should be able to confirm that by highlighting this bar here, and I can see Connor's RSI in this case is 78.03, so between 70 and 80, and that should be the case for each one of these entries between 70 and 80. This one's 79.24, and so on and so forth. So I'm not trying to say in this case that Connor's RSI is the great thing to use with this particular system, but really trying to show you how you can test different indicators to refine your original trading idea to see if there's another factor that will improve your results. And this is a very powerful way of achieving that and developing a profitable trading system. So thank you for joining me for this series of 4 videos on the guide to testing your trade idea. I hope you've picked up a lot of ideas and tips and tricks along the way, and I would encourage you to experiment with your own ideas with the program. You can do this with a free trial of the software, or if you have a license to the software, obviously, then you're going to be using this frequently. And as you experiment with your own trading ideas, undoubtedly you'll have questions, and I hope that there are other members of the EdgeRater community who can answer some questions and provide some guidance. I will be looking at this forum too. I've just created it. If you go to the EdgeRater website, go to support and go to ask the forum, you can register as a forum member, and you will then have to wait for your registration to be approved. But once it's approved, you can then start to ask questions and post in the forum. And the trade simulation forum is the one that I just started. See, it's got 0 posts in there at the moment. So for any questions related to anything to do with trade simulation, if you have any issues with running what I've shown in this series of videos, I'll be happy to answer questions in there. And I also hope that other users will be able to jump in and answer questions too. And this forum, by the way, is also great for looking at different questions from users, and also there's a really fantastic set of scripts that have been written by one of our users, Henry. So I'd recommend looking in there for some great chart scripts to play around with too. So that's it for this video series. Thank you for joining me. I hope you enjoyed it, and I'll see you next time. Bye for now.